Have you ever felt like the market knew exactly where your stop loss was? You're not wrong, and it's not a coincidence. In this episode, we uncover one of the most underused and dangerous layers of crypto analysis, liquidation maps. They don't predict price, they predict pain. Let's decode them. You might think of price movement as random, driven by sentiment, news, or tweets, but sometimes the real driver is leverage and where it gets liquidated. Understanding this gives you a window into how whales actually operate and how you can stop being their exit liquidity. Section 1. What are liquidation maps? So what exactly are liquidation maps? Think of them as heat maps, not of volume, but of risk. They show you where traders using leverage are vulnerable, where their positions get forcibly closed. How? Exchanges like Binance, Bybit, and OKX publish aggregated data on open futures positions. These maps show where the liquidation levels are clustered based on current price and leverage settings. When price moves against a large group of traders, it triggers a cascade. One position hits its limit, gets liquidated, and accelerates the move. The more traders with positions at the same level, the bigger the explosion when it hits. That's the map, not just where people trade, but where they fall. Section 2. Why it matters. Why do these maps matter so much? Because whales, large institutional traders, are not playing the same game. They're not trying to guess price direction. They're looking for pockets of liquidity. And liquidation zones are just that. Concentrated, predictable liquidity. Let's say there's a cluster of long positions that would be liquidated if BTC drops to $64,500. A whale might push the market down just far enough to trigger those liquidations, creating a flood of sell volume. Once the cascade begins, the whale can buy back cheaper, riding the bounce they just triggered. It's not personal, it's just math, and it's profitable. That's why liquidation maps are one of the most effective targeting tools in crypto trading. Section 3. Real-world example. Let's break down a real-world example. In April 2025, Bitcoin hovered around $68,000. Everything looked quiet. Funding was flat. OI wasn't doing much. But if you check the liquidation map on CoinGlass or Hyblock, you would have seen something different. A massive cluster of long positions with liquidation levels stacked tightly around $66,800. Smart traders spotted it, and then the market moved. Within 2 hours, Bitcoin dropped straight through that zone, triggering over $230 million in liquidations. And just as fast as it fell, it bounced. BTC rebounded 4% within the next day. Why? Because the liquidation liquidity had been eaten. The pressure was gone. That was the setup and the trap. Section 4. How to use liquidation maps like a pro. So how can you use liquidation maps without being a whale? First, start with the tools. Sites like CoinGlass and Hyblock Capital give you access to real-time liquidation heat maps. Look for zones with high density near current price. These are the levels whales may target. Next, add context. Use other signals like open interest, funding rates, and volume. OI rising plus liquidation cluster equals tension building. Funding negative plus price flat equals short squeeze setup. Price near dense cluster plus volume spike equals move is underway. And finally, don't be predictable. Retail traders often place stop losses at round numbers, obvious support zones, or right below recent lows. Whales know this, so the map tells them where you are. The trick? Stay invisible. Wrap-up liquidation maps won't tell you exactly when to enter a trade, but they give you a crucial edge. They show you where not to stand when the market stampedes. You're not fighting whales. You're surviving the terrain they control, because when a liquidation trap is triggered, it's already too late to react. Start watching the clusters. Start questioning obvious stop zones. And start thinking like the smart money, not retail bait. In the next episode of Crypto Decode, we'll break down exchange inflows and outflows, how to track whale wallets, institutional money, and stealth exits before the move happens. Until then, stay sharp. This is Crypto Decode. Real signals, no noise. If you see any comments promoting random coins or promising huge returns, ignore them. We never endorse projects in the comments. Stay smart, stay safe, and always do your own research.